You know that feeling when someone shows up for you just when you need it most? That's what Uber is all about. Not just a ride or dinner at your door. It's how Uber helps you show up for the moments that matter. Because showing up can turn a tough day around or make a good one even better. Whatever it is, big or small, Uber is on the way. So you can be on yours. Uber, on our way.
Reality radio for a really great future. We're talking real money.
Wow, look over there. Tom's still here.
I stayed for the second hour this time.
Wow.
Whole show.
I am so impressed you're going to do the whole show
Well,
today?
I haven't done it yet. You're like people to thank you ahead of time for something you are going to do.
Good point.
Yeah, so when I do it, then you can say thank you.
Sorry, I had to sneeze, so I had to press my cough
You're
switch.
apparently allergic to me being on the show with you.
I don't know what happened.
I don't blind. I'm good with that.
I'm sorry.
That's all right.
855-935-TALK. I want to give you that number. That's an important number because that's the way you get these really critical questions answered, asked and answered, because it's tough to find somebody to whom you can put these kind of questions and get a straight answer, get a good answer, get an honest answer. I mean, we talked last hour about how the SEC has fined like everybody on the planet billions of dollars for giving horrible, awful advice. And we want to keep you from falling into that group of people who get ripped off.
In the fiscal year that just concluded in September, 526 enforcement actions totaling $4.3 billion. And guess who the biggest offenders were? This will shock you. This really will surprise you.
No, I doubt it, but go ahead. I'm hard to shock.
Wells Fargo?
Wells Fargo.
Yeah,
what
Fargo.
A surprise that is.
Raymond James, names that may ring a bell. And by the way,
wasn't RBC way up there?
I don't see them on the list.
I thought they were on the list.
First two. By the way,
oh no, RBC was on the list for 12B1 fees.
Well, this is the biggest thing they're hammering down on is selling people higher priced mutual funds with commissions. Mm-hmm. And frankly, folks, there is no reason for you to ever pay a commission ever again. There is no load mutual funds you can buy. And if you don't know how to do it on your own, we give you 2 mutual funds on our website that you could go do on your own, free at Vanguard. Well, not free. Free in terms of commission.
Free, and you're not paying anything to get in.
Yeah, right.
You pay Vanguard, but
pretty small amount.
They might as well be free.
Doggone close. So this is, and by the way, as we mentioned last hour, the largest fine last year, $892 million. Thank you, Woodbridge Group. You remember them. We've talked about them. They fleeced 8,400 people through their sham real estate investments, which included a very well-known financial guru, if you will, guy that we've talked to. We actually had him on the show.
Oh yeah, a reporter who used to be a reporter for Money Magazine, and I used to have him on my old show years ago all the time.
We had him on Sound Investing several times.
And his name is Jordan Goodman. And by the way, if you want to, it's still it is. But I just in my book it was
okay.
For me, his name is Mud. His name was Jordan Goodman.
I mean, he told us on the show if it was a scam that he'd pay people back.
Well, he didn't voluntarily, but the SEC made him.
What did we look at? He received like $4 million or something. What was it?
I think it was 2.6 for some reason.
A lot of money to pitch that product.
Sticks.
Wow.
And he said it's not a Ponzi scheme. It's not a Ponzi scheme. The SEC's overreaching. Then it turns out it was a Ponzi scheme.
Yeah, well, the president of that organization, the SEC has obtained a $100 million fine against Robert Shapiro, the former president, who's 25 years in prison. As I mentioned last hour, his attorney says it's unlikely he'll be able to pay that.
But here's the thing, Tom. I listen to the radio a lot, or to podcasts, and I keep hearing all of these people on the radio, commercials, shows, touting things that cannot possibly work. And yet they do it with impunity.
Well, we had a local example of that, shockingly. And
really? In Seattle?
Our friend Chuck Chaffee was in town. Chuck is based in Boston, writes a column that does appear every weekend in the Seattle Times. It's a national column. I don't know how big it is anymore, but he used to be bigger. I think does he still have a podcast or something? I think maybe he does.
I don't think so.
Maybe,
I don't think he
did
does.
for a time. And he was here speaking to the Seattle chapter of the American Association of Individual Investors, something that Don and I have done as well. And he said he was driving down the road, listening to Financial Talk Radio, barely able to control himself. I read that first paragraph and I started getting sweaty. I was like, "Uh-oh, is that us? Oh, God, what's he?
It's Don McDonald and Tom Cook.
Oh, man, we're in trouble." No, it turns out he was listening to Trading and Investing with Ryan and Larry. And they work for the organization called Online Trading Academy, which tells you that they will train you up to be a top-notch trader. They will show you how to trade stocks and bonds and options and all that good stuff. Which
why are you just investing in mutual funds?
Yeah, boring old mutual funds.
Oh,
yeah, and by
the way, Chuck does still have a podcast.
Okay, well, Chuck,
Money Life.
Generally, I like his work. We have gotten into arguments with him between passive and active investing, some of that. But if you sat down and had a cup of coffee with you, I think he'd say buy an index fund. But at any rate, he doesn't even get into the investment advice that these guys provide. But what he does get into is how misleading they are about the business, because they said things like this: mutual funds are expensive. Expense ratios are as high as 2% or more. Okay, you really have to work pretty hard today to buy a mutual fund today with a 2% expense ratio.
They're absolutely.
They're out there, but you'd really have to spend your time doing that. You know, today, honestly, if you're spending more than 0.5% on a mutual fund for expense ratio, that's probably too much. We'll talk about a few other things that they mentioned as sort of facts, which are completely misleading. Again, this according to Chuck Jaffe.
Yeah, there are lies, damned lies, and guys who talk on the radio. 855-935-TALK. That's our number, 855-935-8255. If you want the truth, give us a call.
Tom and Don are talking real money.
Do you need a little help with your investments? Set up a free, no-obligation appointment with one of our advisors at TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
Your volume must be way up on your headphones, because I was trying to talk to you during the break, and you didn't even acknowledge my existence.
Well, because you had mentioned something about a certain team in Colorado or something. I was ignoring it. Whatever. They used to have a football team there, didn't they, or something?
You used to be good. Yeah, they used to be good. I remember when.
Ancient guy now running the place who seems to be doing better at this car dealerships than he does with the football team or something.
Well, no, he doesn't have car dealerships anymore.
Well, maybe he should take that up.
He did really well with those.
Maybe he should take that up again. So
maybe. 855-935-TALK is our phone number. Give us a call. Get free tickets to Retire Meet, or get a free ticket to Retire Meet. It's free. It's $10. Hey, also we really do want to see you at Retire Meet. You can get tickets. Just go check it out at retiremeet.com. Tickets are on sale.
And we laughingly bring it up today, which I think is the last day of November. So the event is 2 months away, right? 2 months?
2, 3.
Yeah. You got
3,
December, January. That's a good point. So it's a long time, but it'll go fast because we've divided it into 2 parts. You can either do a morning or afternoon, and we only have 230 seats for each of them. So it'll be sold
out. Plus the 2 weeks, the 2 months and 3 weeks will go really fast, because all of us who go there are getting old.
That's true. It will get fast. We were talking about what other people on the radio, the gist of this article by Chuck Jaffe is how they use sales techniques to mislead you. Right?
Yeah.
I mean, that's what the article really was about.
Well, what are some of the other examples?
Well, I mean, it's kind of fast.
Misleading sales techniques.
So, I mean, thank you. So, I mean, we already told you that mutual funds are too expensive because they charge you 2%. Well,
right. That is spurious.
That's kind of a silly.
It's almost made up, really. Yeah. It really is. Find a mutual fund that charges. The average now has gone down to right around 1.
Yeah, it is.
A little under 1.
And again, I don't think you should pay more than 0.5%, but that's a whole other. But he also says funds aren't as diversified as investors think. In other words, the eggs in one basket thinking, which is kind of silly, because if you're trading individual stocks, do you own more stocks or less? Generally fewer, right?
Right, of course. You can't possibly, and you don't own them for very long.
And we give you on this show the Vanguard Total World Stock Index Fund, VTWAX, which holds 8,800 securities. Now, I'm betting that's more than you get if you use the online trading academy approach.
Well, you couldn't possibly trade 8,800 stocks. You couldn't. You don't have the time.
Yeah,
you don't have the time.
Silly. But I mean, I'll do one more, and then I'm gonna give you. I'll move.
Do one more.
Yeah, well, because it's fascinating.
Well, do one more, and then I want to respond to this whole concept of trading the market.
Well, yeah, because the one he says at the end that I think I haven't heard this complaint in a long time. Mutual funds are illiquid.
Since when?
Well, I mean that you can't get your money during the trading day.
Oh my gosh! I need my money at 9:12 a.m.
Well, guess what day he refers to? 1987, when the market declined by 22% in one day. Now, had you been in the middle of all that, you could have traded out of it and saved yourself a lot of money.
No, because by the time you traded out, you got caught up in the wave. You were one of the people selling into that and causing the crash.
And by the way, Chuck Jaffe points out that no one investing on Black Monday has ever said decades later they couldn't retire on time because their funds were stuck riding out the day in mutual funds. No one ever has.
Yeah, it ruined my retirement because I had to wait until Wednesday instead of doing it Tuesday.
And by the way, the recovery from that problem in late 87 was pretty quick.
It was like a week or something. It was fast.
So, I mean, these people, they use a lot of claims to get you worked up and get you to believe that what you really need, because what they're selling, right, is their classes, which, as he points out, are very expensive. Not at the beginning, of course. They get you in inexpensive, work their way to
in the cheap class.
Yeah, and then you're going to be trading the markets. Now, do you know any professionals who trade the markets who make more than the averages? Well, there's that one guy that runs the hedge fund that's made. You pointed.
Well, he's really not trading. He's buying and holding.
Yeah,
he's not trading.
But he hasn't. But what's the minimum there?
It was like
10
millions.
million or something.
It was a lot.
I don't have enough.
Well, but this is my argument against market timers and traders, are the guys who sell these systems. Because bear in mind, the reason they can say the things that they say is because they're selling a class. They are unregulated. The Securities and Exchange, people go, well, can they say that? Well, yeah, because they're making claims that are unregulated. They're basically lying. And guess what? Lying to you is legal. It is totally legal for someone to lie to you on the radio or the television. They can tell. It's legal.
Is that called fake news, I think? No?
It's called fake advertising. But here's the deal. These guys, if they had a system that could make the returns that they claim you'll be able to make, they're talking hundreds sometimes or thousands of % per year. If there was a system that could do that, why would they sell it to you for any amount of money?
Exactly.
Why wouldn't they not just be doing it?
Well, and this is where the rubber meets the road for me, because there's a guy that runs a registered investment advisory that's been in the news recently named Ken Fisher.
Yeah, he's a stock guy.
He's a stock guy. He tells you he can pick the stocks, et cetera, et cetera. Okay. But the only track record of Ken's, and you pointed this out in a recent podcast, the only track record of Ken's you can actually look at and say, here are the stocks he owned, and how did they do? One mutual fund that operated for a period of time, and it underproduced the indexes, right?
Right.
So, but that's only. So you never know with these guys what the track record of any of this is.
And he closed the mutual fund because he didn't want people looking at the track record of the mutual fund going,
hey, wait.
It didn't work. Value Line they were a newsletter that used to claim market-beating returns if you just followed our advice. Well, their mutual fund underperformed the S&P 500 regularly because while they may be making the right suggestion at one moment, this second, 10 seconds later, all of the buy orders that come in have now moved that price higher, and you can't catch it. That's why this stuff doesn't work. Even if they knew in advance which stock was going to go up and they told you, 12,000 other people heard it at the same instant or slightly before you did and bid the price up, and you don't make any money on that transaction.
Chuck Jaffe points out at the end of the article, when someone says they can improve investment results but stretches the truth and defies reality to make talking points, raise your guard higher than ever. I think that's spot on. Again, when people mislead you in some way, you should be worried about everything else that comes out of their mouth.
Or as I say, run away. just run away. If it sounds too good to be true, it's not. It probably is too good to be true.
Likely.
It's not true. If somebody says you can make the returns of the stock market with none of the risk, not true. If someone says you can make 8% per year safely with no risk, guaranteed.
Come on.
Not true. If somebody says you can trade the market and make 300% a year, not
Oh, and I got
true.
one more. Somebody saw me recently. I hadn't seen him in a long time. They said, you look the same as you did 20 years ago. Not true. Yeah,
true.
Sorry.
855-935-TALK is our number. Give us a call. Get some tickets.
Tom and Don are talking real money.
It may not be the sexiest website in the world, but it's your one-stop shop for real money information, talkingrealmoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
And we want you to call us with your questions at 855-935-TALK, 855-935-8255. I'm Don. I'm the curmudgeon. Tom, not as curmudgeonly.
Oh, I'm pretty close.
I said not as curmudgeonly.
I want to close out the thought on other advice. By the way, because oftentimes people say, well, tell me what I should do. Here's what you should do. You should buy index mutual funds. You should pay attention to your costs. You should know, you got to know before you invest $1 what rate of return you're trying to make and how much volatility you're willing to accept to make it. You got to know all those things. Or you shouldn't be an investor.
Well, you're probably not an investor if you aren't doing all those things.
People do it every day.
It's not that other stuff. All this other stuff is speculation, which means gambling.
Yep.
Gambling. 855-935-TALK. Get tickets to retire. A ticket to retirement. I want to be very specific about that. You get one. 855-935-8255. If you want two, though, two are only $5 because of the $10 discount.
Good deal.
So
what a deal.
There you go. All right, Sandy, you're up next. Welcome to Talking Real Money.
Hi, Sandy.
Hi. I had a question about, so my friend recently inherited some money, so now she's, got too much, but who could say that? But anyway,
no such thing, but okay.
Right. Anyway, it's like 3.5 million total.
Oh, wait a minute. I'm resetting that. Yes, that is okay then.
Yes.
In that case.
Right. So she's going to a certified financial planner, just to map out like her expenses and everything like that. But one thing that he was going to do was, or one potential thing is then he would continue to manage her money. And of course, I feel like that's a lot to spend every year to have somebody actively manage it. But also he mentioned that the fees, what they charge also includes all the fees. And I don't understand what fees he's talking about.
Wait a minute. You didn't say how much they charge. How much do they charge?
Well, see, this is the part I was not quite sure, but I think it's around 1% for how amount of money she has.
Okay, now I want to be careful here. 1% is generally what you're paying the firm. If they buy investments, which is likely mutual funds, then there's an additional cost because you said you weren't clear on all of it. So some of it would depend on the type of investments they use. What firm, just out of curiosity, or type of firm is by the way, just having a CFP doesn't mean they're always going to do right. By the way, there's a big argument inside the CFP board about this. But are they with a brokerage firm or is it with a registered investment?
I should also say they're a fiduciary also, actually. And
I hear that a lot too. I mean, there's a guy who sells indexed annuities who's a CFP and claims he's a fiduciary, but he's not always required to act as a fiduciary because he sells insurance. He sells annuities.
This guy does not do that.
Okay,
he does not do that. He does nothing but like planning, make sure you have enough money for retirement and how you.
And by the way,
management.
just to interrupt. So on the 1% on the first million, I'd probably be okay with, but the fee should go down dramatically after that.
Okay, and what would be appropriate?
I'd say 0.5% on the next one.
Half to no more than 3/4,
and then after
half to
2
no
million,
more. It should go down again, probably. Yeah.
I mean, it should be because the amount of work that it takes after a couple million is not significant enough to charge that. But because I just saw somebody, was it Schwab?
As a matter of fact, here's the thing we can do. Do you know the name of the firm?
I I've already forgotten it, but it's an independent one in Bellevue.
Okay.
Okay, because what I was going to say is I could
look. It's not a national chain. It's independent. It's part of the. They go through that LPL.
Oh, wait a minute.
Oh, back it up. Let's rein this in. Then let me say, if they're working with LPL, Sandy, I guarantee you this advisor is not always required to act as a fiduciary. And if you will hang on for me for a second, you need to anyway because we got to take a break. I'm going to go in and look up some of the fee structure for LPL's advisory businesses. So hang on, I'm going to do some research during this news break, and we're going to get to the bottom of this person who I'm about to say may be fibbing a bit.
Tom and Don are talking real money.
Download the advisor interview form and find out if your advisor's a fiduciary at talkingrealmoney.com.
For a really great future. We're talking real money.
Hi again. Welcome back to Talking Real Money. I'm Don McDonald. Along with Tom Cock, our number is 855-935-TALK, 855-935-8255. Give us a call with your questions, and we'll send you a ticket, or we'll send you a code for $10 off tickets to Retire Meet 2020. Now, we're talking to Sandy. Sandy has a friend who has come into a great deal of money. This makes most stockbrokers and, quote, financial advisors salivate. They really do. It's like Pavlov ringing a bell.
Well, I believe our friend Paul Merriman once said they would crawl across cracked glass for an account of this size because of the amount of money they make.
Now, Sandy stated that her friend was told by the certified financial planner with whom she spoke that this financial planner was a fiduciary.
Fee-only fiduciary.
Well, yeah. Well, while he may be charging her fee only, he also has works with Linsco Private Ledger, these days known as LPL. LPL is a gigantic brokerage firm for independent stockbrokers, but these days stockbroker has negative connotations, so they like to call themselves fee-only advisors. Well, there's no way that this person is a fee-only advisor, or they would not hang their hat with a brokerage firm because the brokerage firm works on commissions. They are what is called a fee-based advisor,
duly
and they
registered.
Are not.
Duly
registered. Yeah, they are not always required to act in the client's best interest, and that is a critical differentiator. Now, I looked up LPL. LPL has a number of different programs
they have a lot of
that
people
they do.
In Bellevue,
a lot
too.
of them.
Sure.
Well, but they have a lot of different programs they use with advisors.
Yep.
So pinning down the fee is difficult, but in almost every case I looked at during the break, their starting fee is 2.5% per year. And it goes down from there. So the 1% your friend was quoted may very well be the average over the entire $3.5 million.
Which, frankly, would be an outrage. That is way too much to pay on an account that size. I think an average, if you're looking at an account that size, should be more like 25 basis, or I would say 30 basis points. But because anyway, it's very expensive.
That's very expensive. The person is lying about being a fiduciary because they're not, and this is normal in the industry. They're not required to tell the truth. What I would suggest, Sandy, is have your friend go to talkingrealmoney.com and download the advisor interview form.
It's right there on the home page.
It's a 2-page thing that you can print off for free, no obligation. We don't even ask you for information about you. You just print it and have her take that into the advisor and ask him to fill it out and sign it. If he refuses to sign the fiduciary pledge on there and to tell the truth about the fees, then she should leave and never, ever, ever go back.
And by the way, we on our website, again, I don't remember where that is, Don, but we have advisors we know and trust that are 100% fiduciaries. She can call a few of those to chat with them as well.
As a matter of fact, I just put up a brand new video at Talking Real Money. It's about how to choose an advisor.
Oh, I thought it was tricks that kittens did. Okay.
Yeah, no, I took the kitten tricks off. And at the end of that, it has all of those resources, a link to all those resources. And the video will actually be very helpful to her because it talks a little bit about this business of not always acting in your best interest.
And by the way, I mean, this is a lot of money. This is a huge decision. She should take her time finding the fee-only advisor,
people.
yeah, 100% fiduciary, and a good fit for what she needs. Absolutely.
Do you think
and this,
when he says the fees are included, does that mean like
No.
the 1%? He said the one also covers the fees that they charge for buying and selling?
No.
Yeah, maybe for buying and selling
No.
is possible. They could
well,
be.
but you're still going to have fees and commissions on mutual funds. Not commissions, fees. You're going to have fees on the funds. So it's not all inclusive. He's being a little cagey. He's being awfully ambiguous, less than transparent, and that really concerns me because I know, for example, if you came to our firm, we'd say, we charge you X on this portfolio, and you're going to pay X amount per year for the management fee on the mutual funds. You just tell the truth from the get-go. I wish the industry would do that, but I am confident that if this guy's an LPL advisor, he is not telling the truth, the whole truth, and nothing but the truth, and he won't attest to the fiduciary.
I'd be curious to know what he does with the form, the advisor form. I mean, that's where the rubber meets the road. A lot of people say, "Well, my compliance department won't let me sign that." Sure,
which is a bunch of bull.
It's his own.
I know, but then he should be able to sign it. But I bet he won't. I'll bet he say legally I can't sign that. Yeah, but try it. Have it. If he'll sign it and fill it out and tell you the truth about all the fees, or tell her the truth, then at least he could be in consideration. But I am very confident he is not always required to act as a fiduciary, and I am really, really encouraging her to look for more.
Tom and Don are talking real money.
Just about everything you need to know about money can be found at our website, talkingrealmoney.com.
For your real life and real future, Tom and Don are talking real money.
855-935-TALK is our phone number. There's a fact. There's a simple little, and this was in Market Watch 4 years ago or so. They looked at all the advisory firms, all the firms in America that call themselves financial advisors, all the people. And they determined, based on their registration, whether they were registered as a registered investment advisor with the SEC, registered with FINRA and the SEC as a broker, how they were or insurance agents, et cetera. They determined that 1%, just 1% of all of the folks who call themselves financial advisors are always acting in your best interests.
And this is the part of the problem, because people go into a firm and are you a fiduciary? Yeah, I'm a fiduciary.
Sure.
And they are at that moment, and then oftentimes they can put the other hat on and be a broker-dealer where they don't have that same standard to live up to.
They're the guy in town who's on all over television and things, who claims he's a fiduciary advisor and then turns around and sells people indexed annuities, which everybody in the industry, you ask FINRA, ask the SEC, those are not products that are considered to be in the client's best interest. As a matter of fact, when the Labor Department's rule was being put into place where you had to be a fiduciary to give advice on retirement plans, it was said over and over again, this is going to put indexed annuity salespeople out of business because you can't be a fiduciary and sell someone an indexed annuity. The system is broken in this country when it comes to trusting the advice you get. That's why we're trying to improve your odds by giving you a video like this. We give it to you by giving you an advisor interview form, by giving you a list of advisors that we've done a little research on. We're not recommending them, but we've done some research on them, by giving you all these tools to help you make better choices. We're not saying we're the best choice. We're saying there are better choices, and you should be looking into those choices.
We're not saying we're the only choice.
We can't even say we're the best, but we're good. We're a good choice.
Back to index annuities. By the way, they're having an absolute record-breaking year.
That's because they killed the Labor Department fiduciary rule.
Big, real money. A lot of money pouring into index annuities because the market's trading at a new high. I don't want to be stuck. I don't want to be the last guy holding the stocks when they all go down.
And the pitch is perfect. Talk about pitch perfect. The pitch is perfect. Well, hello, Mr. and Mrs. Smith. How would you like to get the return of the stock market with none of the risk? Where do I sign? Yes, sign me up.
And the numbers are, when people have actually run the returns of that particular investment, they're somewhere between 3 and 4%. Does that sound like the return of the market?
No, it's like the return of a fixed annuity. Yeah. The insurance industry figured out a way to make fixed annuities sexier. That's all.
Yeah.
It was about how do we get a great, and it's all about marketing. How do we come up with the best possible pitch that will make the most for us? I mean, Tom, we've said to each other all the time, just in jest, right? It was in jest,
we're
right?
Kind of kidding.
That we're in the right business, just the wrong part of it.
I know. Yeah, we're kidding about that. I got somebody give me a bad time Wednesday when she was drove off in her Tesla, which she backed up to have come at the door to pick her up. She wasn't in it.
Oh,
she
it came to get her.
Yeah.
I love that.
Yeah, and she said, "Which car is yours?" I said, "That's my Honda Pilot over there." Oh.
And it's many years old.
Yeah, okay. So anyway, yeah.
Yeah, in our case, the old, I think it was Bernard Baruch who in New York said, where are the customers' yachts?
Exactly.
In our business, the clients have the Teslas, not us.
Yeah.
And they don't just have the 3. They have the...
Oh, yeah. You know how much that costs?
The S or the X.
I looked it up. How much it costs to add on that feature?
$7,000, isn't it?
$8,000.
Wow.
But you can still throw a rock through the windshield without any trouble.
Oh, that's the truck.
I'm sorry.
Yeah,
it's too easy.
That's the truck.
Why did you have to win by doing that? Why would you do that? I mean, come on. If it doesn't work, you look like an idiot. If it does, so anyway.
That truck is ugly as sin.
Yeah, that's a weird
sorry,
thing.
Sorry, Elin, but...
apparently it's going to work out. They have like 200,000 orders for it. It's some ridiculous number.
What do we manage now in terms of our assets?
485. No, a little high. 485, 486.
Okay,
like that. Yeah,
so let's say all the clients that ever came to us over the past 10 years, we put them all into indexed annuities.
Mm-hmm.
Oh, we'd be driving Teslas. Oh, we'd be having our chauffeur drive us in Teslas. Do you know how much money we would have made?
How much?
Do you want to know?
No, I'd love to know.
About $39,000 in commissions, or $39 million in commissions. $39 million in commissions on $485 million. And so if we fire all
those other 13 or 14 employees,
who needs them?
Right, you just put them in the index. Bye, good luck,
and you're done. Yeah.
And what's our split?
You and I could get them to sign up.
70-30, which is it?
Oh! I mean, you're giving me 60?
This is really looking like a grim holiday season indeed.
What a holly jolly Christmas.
Yeah. Anyway, I was just trying to do 6 times 4. That's a lot of money.
But think about that for a minute. If we had $39 million.
Yeah. And just for full disclosure, we haven't made anywhere near that amount.
We have made nowhere near that amount.
And I'm okay with that, but it's so. Anyway.
I sleep really well.
Mm-hmm. Yeah. We'd sleep better on a bed where they're massaging you and.
I hadn't thought about that. Yeah, my masseuse comes in every night. Yes, Mr. McDonald, is that you have a little kink in your neck? I'll work that out.
Would you like the window open so the breeze will drove? Anyway, so it'd be kind of different.
855-935-TALK. That's our phone number. 855-935-8255.
I want to remind people again, by the way. Well, I want to remind people not just to listen to this show, which I know they do, but to sign up for the podcast. I mentioned last hour, when I was on vacation, I had nothing else to do because I read the 2 books in 2 days and I was looking for things to do. I actually started listening to the daily podcast, which is very good.
Thank you.
And you can listen to it really anywhere, right?
Yes. Yeah, it's a podcast.
Yeah. Well, and all the different, I don't know. It just shows up on my phone. I don't know where.
Because you have an iPhone, and an Apple Podcast is the 800-pound gorilla in the industry. About 60 to 70% of all podcast downloads come from Apple Podcasts.
Swindled. I love Swindled, by the way. Great podcast.
There are some good ones. Yeah. I just discovered that Jordan Goodman still has a podcast.
Shockingly. And what's he recommending now?
I don't know.
Jordan.
Let me look back. I can't believe he still has 4-star ratings.
This is the gentleman involved with Woodbridge Securities.
Gosh.
What is he?
His November 17th podcast.
And what's he pitching?
This.
Yeah.
Real estate for cash flow and investing in apartments. You know he's hawking something else. He talks about the power of land investing to create substantial passive income?
You just give them the money and they write you a big check every month.
You know these guys are paying Jordan to be on the show.
Oh, yeah.
To plug this stuff. You just know it.
Well, I pointed out he collected a lot in the last deal, so.
I wouldn't trust Jordan Goodman as far as I could throw him.
Which isn't very far.
Because he's a big guy.
He is a big guy.
Like 6'6" or something.
I will give him credit for coming on the show after all this came out. I never thought he'd do that, but he did.
Well, I told him we were going to talk to him about Woodbridge, and he, at that point, I guess, he really believed that he could talk his way out of the thing.
Did. And then he couldn't.
Well, call us anytime. Remember the number, 855-935-TALK. You can call 24 hours a day, 7 days a week, and leave your question, or you can leave it at talkingrealmoney.com.
Tom and Don are talking real money. We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit talkingrealmoney.com for more information and disclosures. That should keep the lawyers happy.